Good evening, and welcome to the Short Vol Show Live. My name is David Lincoln, and kind of a whirlwind of Beyond trading for me lately. We had the big move in Beyond again before the weekend. Let's pull up the chart here real quick, but it's just been kind of a roller coaster trading BYND. Let me move out of the way. We'll look at the chart here for a second, and we can see that the chart is a strange size. Let's go to the 5-day. And we can see this big rip up from Monday into Tuesday. And of course, I got short around this 160, right around here, 168 level. And after the close, this thing just ripped up to the night session, was up even more in the morning, and I sold a little bit more up here. I sold this 87. I'm sorry, I bought a 187.90 put spread, but just kind of held on to my short, held it all the way through. This coming all the way back down here, and yeah, so that was great. I didn't panic. I felt comfortable with my short and rode it all the way up to 200 and all the way back down to here. Ended up taking the position off today mostly. I had the short on, and I switched it to just having strangles on. So I'm still slightly short deltas, but I switched it. So now I'm short just like the 200 strike, the 270 strike, higher up stuff, and puts way down below for these strangles. They're relatively conservative trades, but it's just been exciting to watch this BYND. It felt like a short squeeze here. It really felt that my read on the whole BYND situation was really that there were a bunch of people short it. They were rushing to cover. There was also this hysteria about it. And even though all these news reports were coming out saying that this thing is like way overvalued, and it's at this huge multiple to what I think it was like 68 times. Obviously, it had negative earnings, but so you can't really even value it due to earnings. But it was just all these reports saying it was way overvalued and way above all the price targets. I think the highest price target was like 121 or something. There was just this mass hysteria buying on this thing, and this is the second big rip up for this one. If we go back to 20 days, you can see this first rip up here to I think it was like 186. Then the down move after that. Oh, I'm in the way here. So first move up to 186 here, and then this is where I initially got interested in this issue and shorted it here. And then you see this gradual rally back. And then it just, after hours, it just rips right through that 186 level, makes new highs of 200, and now it's back hanging out around this 168 level here. We'll see if we get another run out of this one. I really feel strongly that this is destined to move lower as more shares become available and people become less interested in this issue. I watched a lot of people on this Tuesday just get stuffed trying to buy this and having it just go in their face. And if enough of that happens, then you're not going to get these big moves up again. But just amazing to watch. The squeeze was on Monday, and then to see that sell-off Tuesday morning was just amazing. All right, so let's take a look at Carvana here for a second. Carvana, this company that sells cars, and the stocks had some pretty amazing moves. If we look at it here, it's had a couple amazing runs up. And I'm going to back out this chart a little bit further, and I'm going to get out of the way here again. But Carvana had one move to up to 76 here, and then kind of sold off down here into the 50s, and then started to make another move up here. You can see another move here. Let me see if I can back this up even further here for a second. All right, so you see the one mover here, and then it's down all the way back down to 30, and then the second move up here. And now it's kind of like more kind of in a mid range. It's not at the highs, but in the 60s. And volatility is pretty high here. There's action. There's two-way paper. There's two-way opinion. And it just seems like an interesting spot to trade a short premium situation. So my idea in Carvana is to sell a couple straddles maybe in August. Sell some at the money or sell some strangles. Kind of tight, just be kind of short gamma here because, you know, this thing's all over the place, and this is a pretty rich premium to me in Carvana here, CVNA. Let's go to the VIX. I know that's what most people watch this channel for. The VIX, we just had expiration. If we look at UVXY, about to take out the lows again. Volatility has come in, you know, with this anticipated rates cut stuff. Volatility has come in, and we've seen this creep lower. It's really close to taking out the lows once again. And no point in looking at UVXY without looking at the VIX term structure. For that, we'll go to VIX Central here, and we see contango at 4.75%. Now, that's much less than it was right before expiration, but now that we're past expiration, these futures can feel free to float a little bit more freely here. That's what they're doing. You've got the difference between the spot and the front month future at about $1.50 right now, which is much more reasonable than we've seen recently. And then we've got the contango between the first 2 months at 4.75%. Now, this thing can roll a lot lower as these futures head down towards spot, or if the VIX collapses. But even if VIX just stays at this level, the UVXY has the potential to just roll a lot lower here. And that is because, it's just because, of the buildup of contango and this rebalancing that's happened over time, and also the VIX kind of collapsing to a lower level. As I pull the VIX up here, we can see, and once again, I'll get out of the way, we can see that it's kind of broken out of that 16. It was hanging out around 16 for a while. It's kind of broken lower, trading down to a low of 14.15 today. And, there's no... this can turn into sort of a falling knife type situation here where it doesn't have to stop at 14, and we've seen volatility kind of collapse here, but that goes along with seeing, this every day we're seeing the E-minis up like 10, up a little bit, the NASDAQ up a little bit. That kind of slow rally back, slow and steady rally is a volatility killer. And we have seen that play itself out in UVXY. There could be more to go here. Hopefully you've maintained some of your shorts that we talked about before, as this looks to be taking out the all-time lows again very shortly. All right, well, thanks for watching the show today. As far as world news, we'll pull up Drudge Report really quick and see if we've got anything new. It says Biden hits turbulence. The presidential race is, in people's minds already. It's starting up again, that new presidential race, and it seems like it's always happening. Anyway, beyond that, I don't see a whole lot of news right now, but we will closely monitor this VIX situation, but it definitely feels like it can continue to move lower from here. If you are looking to jump on the VIX bandwagon, it might not be the best spot to start shorting this when we're taking out the all-time lows in UVXY. Not that it can't go a lot lower, but the VIX is at a lower point than it has been in a while right here. So I can definitely see the case for getting long volatility as opposed to selling it here. However, I'm not interested in getting long volatility because I know that it could stay at this level for a long time. So, in my mind, it's either short it or do nothing at this level. But I know that some people who are looking to bottom pick here will be looking to get long some sort of volatility. And the best way to do that, in my mind, if that is the way you're thinking, would be to sell like way out of the money puts in UVXY that are unlikely to get there. So you could look out to like maybe the July expiration. That's only 30 days away, but maybe sell some of the, I don't know, the 26 puts or something. I don't even like those. What if we go out to September expiration? And you could look to go to September expiration and maybe sell like the UVXY 25 puts and look for a pop in the next 3 months. It seems reasonable we'll have a pop in the next 3 months, and you could buy some higher strike in the puts against selling like maybe these SEP 25 puts in UVXY. But this thing could just crawl down to 25, in which case at least you're collecting a little decay on these puts over that time period, and you can adjust accordingly. But yeah, if I were going to get long volatility, I would either consider selling way out of the money puts, or I'd buy some cheap collapsed call spreads here. Remember, because of the skew, that call spreads are cheap all the time. So if you were to go once again maybe out to September and pick something like the 33-36 call spread, buy the 33 call, sell the 36 call, get into the 33-36 call spread for something like 85 cents, then there's got to be a pop in the next 3 months, and you should be able to finance that 85 cents quite easily if you were to buy a few of those call spreads. So those are some ideas for from the long side. From the short side, we would be back to some ideas such as I would say going out to your Dees or Jan, and doing something like maybe you buy the Dees 25-20 call spread, put spread, UVXY. But, as I said, I would wait for some sort of pop, some sort of little move in volatility to the upside to kind of have that ready to go, that put spread ready to go. And when you do get that pop, pull the trigger to execute it. But, yeah, looking like something like that. This Dees 25-20 put spread, you could all but double your money getting into that for around $250. So that seems reasonable to me. But, equally reasonable seems something like, once again, buying like a Dees 33-36 put spread for like $1, something like that. I even like that SEP one I talked to you better for 85 cents. But those are some options ideas for UVXY. Like Carvana, I was talking about straddles. If we look at BYND, I can tell you what some things I've been looking at and doing. I've been selling the August 270 call, and then I picked the August 70 put. So you can sell that strangle for $5 and change. Seems like a pretty good deal to me. $500 each time you do it. This thing's got to get up and really giddy up to get to $270. I don't think it's going to do it. And I like that trade. Relatively low risk trade as far as I'm concerned. It's going to take some buying power to sell that strangle, but definitely I can see volatility collapsing and coming in on this. Very similar to the way Tilray volatility came in after it made its big moves. So some stuff for you to think about. I am still editing the video that I just did, which is an interview coming out soon. If you're a Patreon supporter, you can already see that video. Please consider supporting me on Patreon. And thanks for watching the Short Vol Show today live, and we'll see you again soon.